Welcome, Garry Smalley in Manhattan, the managing director of ElmSure, an insurance company that works mostly with, he would explain that, but insuring financing pretty much for people and part of a large group, a large organization. So welcome, Garry. It's a
Thank
pleasure
you.
to have you. I really enjoyed our previous conversations and you have a lot to share. So why don't you start with your story of origin? What got you here in this
Okay.
role at ElmSure, doing a lot of good for people who are buying properties. Yes.
Sure. Really quickly, my insurance career began at Geico many years ago, and understanding the way Geico did business as far as, trying to streamline processes and things of that nature, that's been a key part of, my career. Moving forward, I taught insurance classes in Manhattan where I met my first partners at Fountain Management. They were a leasing brokerage in Manhattan, and we partnered to create an insurance agency that could service the needs of the customers that were leasing property in Midtown Manhattan. That company was then purchased by two of my other students who opened a company called Cover Wallet. Cover Wallet was looking to disrupt the way small business insurance was done online. And so they purchased Fountain Risk Management and brought me on board with one of my teammates to help spearhead the Cover Wallet experience. From there, Cover Wallet was purchased by Aon several years later for, 300 million, I believe. And while that was happening, the founders of Rock Capital at the time were looking to add an insurance agency to their loan origination processes because they were finding that, in the space of where they focus, collateralized lending specifically for investors who are building fix and flips or ground up construction projects or investment real estate. They needed specialized insurance. And because they were doing these loans nationwide, it was sometimes hard for the borrower to find the proper insurances they need. And so they wanted to start an insurance agency. So I came on board to create ElmSure. That was back in 2018. We sold our first policy in 2019, first quarter, and we've been moving forward ever since, looking to be an insurance solution for borrowers and lenders, specifically in the real estate investment space, primarily doing fix and flips, ground up construction, tenant occupied and multifamily, renovations or cash flowing multifamily property deals. Our parent company, Rock 360, owns a conglomerate of companies, all in the, collateralized lending space, specifically around the, real estate market. We have Civic and Falco Lending, who specialize in, origination of loans in that space. We have Rock Capital, which is a white label lending arm for other entities to have capital for their borrowers. And then we have, ElmSure, which is the insurance agency arm. We have Tamarisk, which is the appraisal arm. And all those put together are meant to help a borrower get from start to finish of a loan in only a couple of weeks, where it typically takes a few months. So ElmSure, leveraging the relationship we have and with Rock 360 has begun offering this same insurance product to other lenders and to borrowers outside of the Rock ecosystem to help them service their insurance needs as well.
Okay. So beautiful journey. Congratulations, all the achievements. You're really a veteran of this industry. Yeah. It seems like you know it A to Z. To
Yeah, yeah.
yes,
It's
yes,
been a long
yes,
time. Yeah, absolutely.
yes, yes, yes. So tell us, what's the volume now? Almost 10 years, 10 years in the job? Yes, 8 years in the job? Or
About 2018, yeah, about 7, 8 years. Yeah.
yeah.
Mhm.
So where's the business at today? I'm sure. Leaning
Uh,
on
right.
Rocks 360 and also outside now, as you were
Right.
saying. Yeah.
Primarily Rock 360 business. That's a huge volume, but we're
Mm.
also leveraging, like I mentioned, outside of Rock and also direct to borrower through our website or direct to insure through our website,
Mhm.
offering competitive pricing for existing policies they may have,
Mm.
and helping them get to the finish line with deals that they're doing in other capacities. So, we're looking to continue to grow that space year over year.
What are your projections? 20%, 30% more?
Well, it depends, right? There's some economical challenges that may come up, especially
Mhm.
in today's economy and conditions with, the war in the Middle East and uncertainty from borrowers as around buying investment real estate and not knowing the, status of the interest rates and the Fed and things of that nature. So those, levers don't impact our business because the growth slows down. It's more, begins to get more takeaway. So
Yeah.
if growth slows down now, I'm trying to find borrowers that are or insurers that are unhappy with their current agencies and looking to work with us in a more specialized capacity. But we hope to see 20% growth over the next year based on some of the projections we've had, especially if the Fed lowers interest rates over the next year or so.
How many people are on your team at ElmSure?
Right. So ElmSure has a team of 25, 10 are onshore, 15 are offshore. And,
Okay, okay,
yeah, Costa Rica, India, and Spain are
okay,
offshore.
okay, okay. And Rock 360, if it's not confidential, really accumulates a 4 billion, right? Of
Last year was
funding.
4 billion, and yeah, that's public knowledge. Last year they did
Okay.
around 4 billion in origination, bought
Yeah,
and funded loans, and
yeah.
always looking to grow as well, each and
Okay.
every year.
So it's a big pond for you
Yes,
to
it is.
to fish in. Yes, okay. But you still want more and you go after.
Absolutely.
Okay,
Yeah.
and you still go outside. So tell us your venture outside of Rock 360.
Right. So a lot of that has to do with attending conferences where other lenders are present, and
Okay.
looking for potential borrowers or partnerships. Just came back from a conference in Miami called IMN, where that's specifically around real estate investing from the standpoint of cash flowing property. A lot less the fix and flip and ground up, more so, hey, I have tenants in this property and I'm looking for cash flow. And so we met many lenders there, and we look to partner in one of three ways. We say, okay, hey, we can offer insurance quotes for your team as they need them. We can do a more formalized partnership where there's an API involved. So every deal that comes through your platform, we quote for you. The borrowers have to take our insurance, which is a quick option for them to have available in case they have any snags towards the finish line. And then the third is more of a embedded solution where we look to offer all the services that a lender may need. They need to have insurance reviewed when it's submitted to make sure it meets the requirements. They need force plates. They need quotes. They need some bot interaction between them and the parties that actually buy the loans and balance sheet those loans. And so we look to offer a larger solution around that as well. But primarily, it's more focused on providing quotes for borrowers to help their loans get to the finish line when need be.
Okay. And so that's agent to agent, that's a human voice to
That is
yeah, yeah.
correct.
Direct
Correct.
interaction and okay, got it. Got it. Okay. So you spoke a little bit about the trends in terms of the economy, the geostrategic context, the financial policies and so on and so forth. What are the other trends that you see on your market today that impact the way
Well,
you do
yeah,
business?
absolutely. So one of the biggest conferences that I attend is the InsurTech conference. They have them in, New York, and London, I believe, has one. They have the biggest one, I believe, is in Las Vegas. But what I found was that last year, as opposed to any other year, it seemed like every other company there was AI driven. Like that's like the buzzword now, AI, where years ago it was SaaS. Now it's all AI. And
Yeah.
so we recognize the fact that people are trying to use AI to be more efficient and make
Yeah.
their ideas more scalable. But when you look under the hood, some of these companies aren't really AI. It's
Yeah.
just someone running on a hamster wheel, act posing as AI, but it's not really. Or some level of logic used, or like writing an Excel spreadsheet or some type of logic they're using to make an output happen, but it's not really a learning model. And so, but there are some learning models out there, right? And I believe that the future of insurance is going to be more bot to bot, where I mean, look, I don't. Most people that I encounter don't want to deal with insurance, right? So, at some point, there's probably going to be a world where your Alexas of the world, or whatever virtual agent you have for your personal use, will be going out trying to find insurance for you for your home or your auto, whatever else you're doing, and that's going to be a bot to bot interaction where they're going to be reaching out to another bot that specializes in whatever brand of insurance you need, and that bot
Yeah.
will tell the other bot, "Hey, this is the best for your borrower or for your customer," and
Yeah.
then it will. So that's where I believe the industry is going, and understanding how to make bot to bot interactions work, or being a hub for that, or creating that ecosystem, I think is the future of where we're going to see the insurance going in the future.
And then, as a business leader, do you believe in being the early adopter, being the pioneer, so you can create some competitive advantage, or you're more on the as a good insurance person looking first?
I mean, we think of ourselves as a tech company first, but I think there's a level of being reasonable around what you're doing, So in some cases, if you do analysis, it may make sense to be an early adopter. In
Mm,
some cases, you can see very well that early adoption may not be the best way to go about this. But I think having the analysis and looking at the scenarios that can play out will definitely help you understand. So I'm not for or against being early adopter as long as it makes sense.
okay, okay, okay. So where does it make sense today to
So
you?
give you an example, right? We look at AI around helping a borrower make the best insurance choice. And, through learning models as opposed to logic, some type of behind the code, behind the scenes written logic, a borrower looking at three insurance policies may choose the cheapest,
Mhm.
right? Or the one that you can write logic that says, hey, you know what, this is the cheapest, but this one has more coverages. So choose this one. So your logic behind the scenes can tell your AI to tell the customer, hey, this one is cheaper, but this one, a little more expensive, has more coverage. But a
Mm.
real learning model would be a little different, I believe. It would be more like, hey, your AI has examined claims and looked at policies over the past year and it understands that, wow, whenever I have a client doing a builder's risk and, doing a renovation on a property in Chicago, there's a lot of vandalism claims.
Mm.
So, if that customer receives three quotes, rather than saying, well, this quote has more coverage, take this one, it should look at the quote that has more limit for a more supplement for vandalism and say,
Sure.
hey, this is the one you want because although this policy A is the cheapest, you don't want that one. Policy number three has the most coverage, but the coverage it has doesn't specifically speak to your needs, what
Mm.
you're going to deal with in Chicago. But this policy, which is the middle or most expensive, has the better limits for the specific type of claim you're likely to see, which is
Sure.
vandalism. And so
Sure.
that's how we want to see AI
Yeah,
interact
yeah.
with customers.
Okay. More customized, more bespoke, and more
Mhm.
between the lines. Got it.
Yep. Hmm.
Okay, so those are the trends. So tell us in terms of growth, so you won't take your company by 20%. So some will come from Rock 360, I suppose, in terms of this
Hmm.
growth. Some
Hmm.
will come from those other lenders that you reach out. How does it specifically inform your strategy, the trend that you see?
Right. Because we know we're a niche insurance agency,
Yeah.
leveraging technology to be efficient. We understand the pain points of most lenders. We can speak directly to their pain points and to the pain points of their borrowers seeking insurance. Many of the companies that we see out there kind of dabble in many areas of real estate, including personal home and things of that nature, was a different ball game. And
Mm.
so we feel that by leveraging technology and using our current insights with experience specifically in this market,
Yeah.
which is a $1.5 billion niche industry, we have a huge opportunity to capture market share and grow our company through through word of mouth, through being an expert in the space and using leveraging technology to speak to specific problems of the lenders and the borrowers that are trying to get insurance to close their loan.
Yeah. So all super interesting. And I guess, I'm thinking about our listeners as a tech first insurance company. How do you feel yourself? Is AI is pretty recent, in terms of the application in business,
Mhm, mhm.
the way we know it today. How does it fare for you? I mean, do you find it difficult? Do you find it reliable? Do you find it exciting? Do you find it profitable? Do you find it game changing?
Yeah. Again, I think that when it comes to AI, it depends on the use case. We
Mhm.
find that we believe it will be very beneficial for us as we implement it across the different types of, I want to say as we implement it across the different areas of our business, we see that it could benefit. But again, I've also seen where it feels like, in the industry, I hear AI a lot and it's almost like it's just kind of, throwing it against the wall and seeing if it sticks, as opposed to having real, solution
Sure.
based around, evidence of how the AI could work and benefit a space or a
Sure.
specific niche in the industry.
Sure.
So, that's what we're trying to stay away from is just kind of
Sure.
throwing AI in any area we can to see if it sticks, but saying, no, this makes sense right here for AI. This is how it could benefit us, doing analysis around it and being, very focused on how we implement the use of
Mm.
AI in that space. And also regulatorily speaking, we don't want to find ourselves in trouble,
Of course.
using AI in the wrong
Yeah.
capacity.
Yeah, yeah, for sure, for sure. So one question, candid question. If you were looking at those, let's say 18 months, 24 months when AI has been really in the vernacular and you've been more than playing with it, implementing it for your business, what would you rate your satisfaction between 1 and 10 of what you've done for your insurance so far?
I would say about 7.
7?
Right. I think that we have a lot of work to do on how we're implementing AI and using it. And we're still learning a bit, but I do see that there are huge benefits if it's applied the right way.
And then if you were, so let's say, so the same way as you had high expectations and your
Mhm.
expectations met at level 7, you had a plan probably, okay? Or you had an ideal plan of where you would like the organization to be in terms of AI powered solutions, So in this roadmap of AI implementation, where are you at? compared to your goals? Are you at 100% achievement or 80 or 60 or
Oh, that's a great question. I would think that anyone saying they're at over 80% would probably be, fooling themselves a bit because AI is always evolving year over year. And
yeah,
so you might be at 70% this year, but when new technology, new use cases come out next year, you might realize like, yikes, I thought I was here, but now these other things come about and maybe we're not as far
yeah,
as we thought we should be, right?
yeah,
So
yeah.
that's a great question. I would say we're probably lower on the sphere, probably around 20% where we want to be, with a clear roadmap of where we want to get to in 2 or 3 years. Again, I gave you one use case.
Yeah, yeah,
There's
yeah.
others that we've outlined as well as we feel AI can be hugely beneficial.
And then what would you think were the biggest obstacles in that journey?
Resources are always an issue. It does cost, and so justifying it is hugely important to investors. I think that's the biggest component is just
Oh,
making sure
really?
that,
Yeah.
yeah. Mhm.
And what about adoption? People adopting, all the technology and solutions
Right.
that you put in place.
Now, when you say adopt, talking about the team
Yeah,
that works
team,
for
team.
ElmSure or the
Yeah.
people that are experiencing the AI, the customers.
I mean, both ways, like your internal stakeholders, your external stakeholders, they all
Right.
matter. Yeah.
Right. I would say, internally, it's just, we all understand that AI will play a big role in how insurance transactions are done so that we understand that and how to and prioritizing it in a meaningful way is important and being intentional about prioritizing it. We do feel like that is, highly important for us. From a customer perspective, I would simply say, hey, that again falls on us, right? The customer experience is something that us as the agency or whoever is implementing it has to keep in mind. So it's our job to make the customer adopt it by how we implement it, using your
Mhm.
UX and UI and things of that nature. But
Yeah.
that's our responsibility.
Uh-huh. Uh-huh. And do you test that? You have conversation with your customers or is a system
Um,
feedback
We're
loop?
still implementing that. A lot of the AI we use now is more internal facing. But as I mentioned one scenario, we're going to be looking to use AI. There's others as well that are, not at liberty of sharing, but that was one case where, hey, this is how we expect to use AI down the road. And so, we have a ways to go. But again, a lot of those, the way we use it now was more internal and, team facing.
Yeah. Understood. Understood. If you had a magic wand and you can and you can wave it.
Uh,
Okay, 2 or 3 things that you would change immediately within your circle of influence. So you can't change the Fed, okay? You
right.
can't change climate change. You can't unfortunately, the war, we would all stop it if we could. But within your circle of influence, from an operations standpoint and from a growth cycle standpoint, because growth will finance your operations, obviously. So
you know, the first thing is if I could wave a magic wand, every lender would want to work with ElmSure to provide insurance quotes, have their insurance documents reviewed, and provide force place for their book of
okay.
business. So
All right.
that would
So
be the
okay,
first.
okay,
Every
okay.
lender
So
wants us,
all
right?
right. Change a little bit on this one. So then what do you do? What do you do to be number one? What do you do to be number one? Sorry,
Uh,
I want to let you
no,
on
no
the hook.
worries, no worries. Marketing, be the best in class, provide the best customer service as we look at customer experience. Right, you want customers
Yeah,
to want to come back to you.
got it.
Our customers are both the insureds and the lenders may refer insureds to us. And so being able to provide outstanding customer service to our lenders and our insureds. That is the key thing, and using AI to stay efficient and layer in, common sense approaches to where AI can help, facilitate that is what we want to do.
So you said marketing, 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 but that's really the first time that we really speak about it. Besides the conferences, so
Mhm.
what is it that you do in terms of marketing efforts? I think that's a interesting question for people watching us.
Yeah, again, just simply leveraging Facebook, social media. You can be very intentional about who you're targeting.
Yeah.
You can profile and things. So that's the area that we really tend to focus on. I mean, you could do email blast things of that nature also, but we definitely like the social media component.
Do you do ads? You run campaigns?
Yeah, we've run ads in the past. We're getting back to running ads again.
Uh-huh. Have you seen good results or
When we did run ads, yes, we had great results, because we feel that this market is very niche, and
yeah,
so, you
yeah,
have a high people that, click on the link and do a quote are highly motivated because
yeah,
they probably have a deal
yeah,
that they're
yeah,
looking to, get to the
yeah,
finish line and need insurance. Yep.
yeah. Wonderful. Okay.
Mhm.
And the cost of acquisition works out?
Absolutely. We have, I mean, look, when we've done marketing campaigns, again, we can only look at the deals that have come to us. We don't know if the deals have funded or not. So it could be
Mhm.
that they didn't buy the insurance because, hey, the loan fell apart. And so we
Sure,
didn't buy the property, so we don't need the insurance. We don't always know that. But if
sure.
we look at historical data, we're doing about a 33 to 35% take up. So that means that every request that comes in, 30% of those people actually buy a policy from us.
Good.
Yeah,
O
that's really good.
Yeah, yeah.
Well
Okay,
above industry. But it's because it's niche. It's not just a general insurance offering for auto and home and life. And no,
yeah,
we stick to what we
yeah.
do best.
Yeah, yeah. Well, we covered a lot, Gary,
Yes,
many years of insurance in 30 minutes of a podcast. Okay. So maybe we'll meet again in a year. You'll come back and tell us, what happened,
yeah,
this fast
absolutely.
track of AI and pretty disrupted environment in general.
Yep,
Uh, but, you have a part to play because risk management is more and more important for companies and for people. So,
absolutely. Yes, indeed.
so, yeah. I mean, the question is, of course, the cost and the opportunity. But, well, thank you very much. It's a real pleasure.
Thanks,
Thank
Francis.
Well, thank you enough, and I'll slowly follow your progress and hopefully have you again in 1 year.
Absolutely. Thank you very much, Francis. Pleasure being on
You're
the
so
show.
welcome. This is the end
Thank
of
you.
our podcast. Thank you.